Good Friday morning to you. Welcome to the Global View. I'm Nadine Blaney. It's the 26th of June and we saw stock markets mixed overnight. Investors continue to weigh up strong earnings from parts of the AI supply chain against growing concerns about who ultimately pays for the massive investment that's driving the AI boom. So the Dow was up marginally. The Nasdaq fell 0.5%. We had weakness in mega cap tech stocks offsetting strength across the semiconductor sector. Apple soured more than 6% after lifting prices on some of its products to offset higher memory and storage chip costs. Nvidia, Microsoft, and Alphabet also fell. In contrast, though, Micron surged almost 16% after delivering better than expected earnings and guidance after the bell yesterday, helping to lift the broader semiconductor index by more than 3%. Qualcomm was up after reporting it expects $15 billion a year in sales from its data center business by 2029. And JP Morgan shares jumped as succession plans hinted the fact that we could get more years of CEO Jamie Dimon. The key macro takeaway was stronger than expected U.S. economy combined with sticky inflation. U.S. inflation pushed above 4% in May for the first time in 3 years, reinforcing expectations the Fed may need to lift interest rates again before the end of the year. Supporting that view, final first quarter GDP growth was revised higher to 2.1% from 1.6%, jobless claims pointing to a continued resilience in the labor market. Federal Reserve Bank of New York President John Williams says that while inflation pressures are likely to moderate this year, they remain too high. While Austin Goolsbee said he sees a glimmer of hope in the latest inflation data, but that inflation pressures are still high and trending the wrong way. Despite that, U.S. Treasury yields fell, with inflation coming in lower than feared. Notes fell to 4.934 after earlier reaching the lowest level since May the 8th. In currencies, the U.S. dollar fell against major peers, but remained near its highest level in a year. The euro moved just above its 13-month low, while the yen was near its lowest in 40 years against the U.S. dollar, with more intervention expected from Tokyo, and that could happen today. Oil prices edged higher, but were still near levels last seen before the start of the U.S.-Israeli war in Iran. Expectations of rising supply from the Middle East outweighing demand concerns. Brent crude settled up 2%. And gold bounced back above $4,000 an ounce on lower dollar and treasury yields. And after dropping to 58,000, Bitcoin recovering slightly but remaining below 60,000. All right, let's get some analysis. Brad Gastwirth from Circular Technology joins me now. Brad, amazing contrast between what happened with Micron last night and Apple.
Yeah, I mean, first of all, the Micron report and what management talked about was phenomenal. I mean, it was absolutely well above, I think, most people's expectations in terms of the actual nuances and the information that they gave. I mean, these long-term contracts are unprecedented and very strong. And, that was a good reason why the stock was up 15%. Yeah, on the other hand, Apple, you clearly have concerns on the consumer side when prices of products are going to go much higher. What is demand going to look like there? And, Apple's taking it on the chin a little bit because of that.
Yeah, okay. So that Micron result, it was a blockbuster. Everybody agrees. Market voted with its money overnight. So where does this story go? Because we still do have sort of supply-demand dynamics that will change rapidly, you would think, in the next couple of years.
Yeah, I mean, it's traditionally it's a cyclical business, right? And when you look at the cyclicality of it, typically you have these cycles where you have firm demand, less supply, they increase capacity, and then all of a sudden pricing collapses. The new thing here is just because AI demand is so robust and it's really growing exponentially, that these long-term contracts for a commodity part like memory, it's unheard of. And I mean, this gives investors significant confidence going into the next several years. I mean, Micron mentioned on their call last night that even through 2027, there's still going to be shortages, and that's with the new capacity coming on. I think you're going to see a very strong supply chain throughout the next 24 to 48 months, and I do not think this rally's over on the supply chain stocks.
Okay, so does that extend then to the hyperscalers? Because it seems that the spenders, are perhaps getting punished a little bit right now, as in comparison to those that are the makers, so to speak.
Yeah, and Nadine, great question. I think you have to look at each one individually. If I look at Amazon and Alphabet specifically, they're doing an incredible job monetizing their platform. Now, the spending is, it's at unprecedented levels as well, but they're monetizing with their TPUs are doing phenomenal. They have better cost per inference than an Nvidia GPU, and they're getting significant contracts there. So, I mean, even with their spend, that company is going to continue to benefit. Same with the Microsoft. Meta is a little bit of a wild card, but the interesting thing there, even with their robust spend, is that they can likely raise prices on a host of their products. So let's look at their install base of either Facebook or WhatsApp or Instagram. Let's just say they charge a few dollars for WhatsApp. A billion plus people have it. It's a very widely and needed product. They can make billions of dollars rather quickly from that. So there's an interesting play from their product side if they raise prices. There were some stories that they were looking into that and doing some test trials. I would not be surprised in the next 12 months you see pricing for Instagram, Facebook, and WhatsApp.
Okay, so put this AI revolution in the macro context, because rising inflation, revision upwards in terms of quarterly GDP, and most of that growth was from the whole AI spend that was happening. So does that positivity, does the AI infrastructure spend offset, or just tell me how you see it playing into the macro?
Yeah, Nadine, you're hitting the most important points. I think most, or if not all, of the GDP is from this AI boom. And let's not forget, though, what's happening because of AI. I mean, you're seeing significant layoffs at these largest companies in the world. I mean, Oracle's, it's tens of thousands, Meta, Amazon, Microsoft, you name it. There's tens of thousands of employees that are losing jobs because of AI. That's going to have a significant impact in quarters to come. But the spend is still going to stay very elevated until we hit artificial general or artificial super intelligence. I've been saying that for the last 12 plus months. I think, the race to be the first is very important. When we do achieve that, I think you might see some lower spending, but I still think we're over 12 months plus away from that levels.
Okay. So when you are thinking about what could change the story, are you thinking about Fed hikes? How perilous is the market if we start to see the cost of doing this business rising?
Yeah, another great question here. First, how much influence is our administration going to have on the Fed is number one, because if he really has his sort of tentacles there, you're not going to see a rate hike, right? I do not think President Trump wants to see interest rates higher, and I think there'll be some very bold comments if we do get a rate hike. That being said, inflation is going to continue to tick higher, and if you cut rates, it's going to go higher. So I think they're between a rock and a hard place. I don't think we'll see an immediate move higher anytime soon. That being said, we've been surprised before. It wouldn't be the first time.
So, Brad, bring it back home for all of our viewers. What are you doing in terms of asset allocation? You're obviously very bullish when it comes to the AI trade, but surely you're not putting all your eggs in that basket?
Yeah, you still have to have this, I like to call it a barbell approach. I think you have to have significant exposure to anything AI related, anything robotics related, defense related, I think is still going to see a significant boost. And then I love precious metals. I've been saying that on your program, for over 3+ years. I still think gold, it's come back off the high over 20%. I think it's a good entry point. But I think if you look at sovereign governments, they're increasing gold stockpiles. And I think that's going to continue. It's a great hedge when this market does stop. Gold is going to be a great tangible asset.
All right, Brad, we're out of time. That seemed to go quickly. Nice to see you on this Friday. I hope you enjoy your evening there.
Great. Thanks.
Brad Gastwirth there joining us from Circular Technology. Big story that Micron won. I meant to talk to him about SpaceX, but never enough time. All right, let's check in on what all of this means for the start for our local market. We are expecting to see a bit of a lift at the open. So I would say we could probably put that down to the fact that we've got gold moving higher. We saw a 2% increase in Brent. So maybe we won't see the same sort of damage being done to some of these key commodity plays here at home. So we'll get you across the open when we return.